Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Nigel D'Souza. Well, it's turning out to be a session where we are seeing some amount of follow-on buying, but we are seeing the mid-caps participate more, something which was opposite to yesterday's trading session. So we have the mid-cap index, which is up around 0.7% at this point in time, and the bank Nifty, which is up around 0.5%. In fact, for the week, the Nifty or the frontliners have really taken it forward with a gain of around 1.7% at current reckoning, and the mid-cap index up around 1.2%. But today, we have a lot of stocks buzzing, a lot of news to focus on as well, Nigel.
Well, that's right. The markets are trading well in the green, but stocks and sectors, they're going to be in focus. And to help us out with how he's positioned with regard to his portfolio, we have with us in the studio Balaji Vaidyanath Narayan, the director at NAFA Asset Managers, who joins us in the studio. Hi, Balaji. Welcome to Bombay, and thanks a lot for coming down to the studio. Well, you all manage an AUM, I think, of little over 500 crores or thereabouts, and your performance has been quite good. But at current reckoning, how are you all positioned, with regard to your portfolio? The street seems to be very, very bullish on a couple of themes like banking. So how are you all playing that? And what's the call on PSUs now?
Thanks, Nigel, for having me on your show. It's a pleasure to be here making my TV debut. Current positioning is we're not extremely bearish in the markets. We are still able to find a lot of value, especially in the mid cap and the small cap space. So currently we have cash levels of about 8-10%. And as far as financials are concerned, we continue to be underweight on financials, and we've been underweight on financials for the last 2 to 2.5 years, and I think that is going to continue for some more time.
And the PSUs?
PSUs, we are zero on PSUs actually.
Oh.
So yeah.
You have an interesting fund, the NAFA Emerging Blue Chip Fund, but majority of your holdings is within the mid-cap and the small-cap space, I think around 90% if I'm not mistaken. Do you think that now it's probably time to sort of rejig the portfolio considering the kind of gains that we've seen in the mid-cap specific stocks?
So it's more like a self-fulfilling prophecy. Just because mid and small have gone up, therefore you go to large. That seems to be like a consensus thing that's playing out, Ekta. But what's happening is that if you look at the constants of Nifty, it's painting a little worrying picture, right? So the current blue chips, the ownership is very, very less. But what are the actual blue chips in India? So you have Apple, you have Amazon, you have Alphabet, you have companies like Meta, which has a 25,000 crore turnover. Apple will touch 70,000 crore turnover this year. I mean, these are all numbers that are greater than Cipla, Sun Pharma, Bajaj Auto, Hero, and so on and so forth. The real growth is on the large caps is happening outside of the Nifty, and the actual growth in the mid and small is happening within the market. Whereas in the early 2000s, this scenario was complete reverse. So you could be in the top 30-40 names and make a lot of money, and the mid and small were untouchable because of lack of corporate governance, a lot of unorganized space, and now it's the complete reverse, right? So mid and small, the corporate governance has improved. More and more sectors are getting listed in the mid and small space. So the opportunities are more over there, and the real blue chips are growing outside of Nifty. So that is a problem. So two-wheeler penetration in early 2000 and two-wheeler penetration now is very different. Four-wheeler penetration in urban India in early 2000 and four-wheeler penetration now is very different. But in the Nifty, you have the same stocks, but the large cap growth is coming outside Nifty. That is a problem.
So a bit of a reverse in comparison to what we saw in early 2000, where bulk of the growth was coming in, from the Nifty constituents.
Yes.
Let's talk about a couple of themes, and Castrol is a stock that actually went to sleep for many years. It was actually an underperformer, but that's come back into play, and that's something that you'll have in the portfolio. So I want you to run us through that. And the other one, I think, is Heritage Foods. There was that political tailwind that played out, but how much of the good news is in the price on both these two names?
So Nigel, in terms of Castrol, right, so we have it in the portfolio, and our thought process behind Castrol was not actually the Castrol India numbers. I mean, we all know it's a very cash-rich, zero-debt MNC and stuff like that. But we were tracking Hertz. Hertz is a global global car renting company, which is listed with $1 billion market cap. In 2021, Hertz came and announced that they're going to move entirely into electric vehicles. That's when Tesla actually hit $1 trillion market cap.
Okay.
Within 24 months, Hertz came back and said that, we are giving up 30% of our EV fleet within 24 months. So that's like a 180-degree shift. So the reason is high maintenance. This is as per the company, right? So high maintenance costs. A EV car is 30% more heavy than an ICE car. Therefore, the tires wear out faster. And Tesla, the OEMs themselves were reducing the prices of their end products, which means the second-hand market for their cars were coming down. Therefore, we are switching it back to ICE.
Yeah.
So Castrol was weighed down by terminal value questions. If lock, stock, and barrel people move towards EV, what happens to lubricants and things like that. Similarly, if you look at, say, Ford and Mercedes, they have publicly gone ahead and said that they are actually scaling down on their EV plans. So this gave us the confidence that Castrol was trading at a 4-5% dividend yield then, throwing out a lot of cash as dividend. So it was like a heads I win, tails I don't lose much kind of a scenario. Secondly, Nigel, at that point in time, couple of MNCs actually came and sold their India stakes. Whirlpool, Timken, ZF. In the case of Castrol, this issue happened way back in 2016 when their parent British Petroleum sold the stake in 2016 itself. So the probability of further supply coming in Castrol was very limited from the parent side.
So parent holds how much now in Castrol?
51%.
So that's why, okay, got it.
So this gave us the confidence to get into Castrol. And also this emerging trends as an idea, it's a bit overrated, Nigel. So if you look at the worst performing ETF in the US, it's the lithium and battery tech ETF.
Oh.
If you look at the worst performing ETF second worst performing ETF is copper ETF. If you look at the price of all the plant-based meat stocks, they've all taken a huge beating.
Yeah.
People don't talk about blockchain anymore. So, these buzzwords, they have a shelf life of 18 to 24 months. And then, as a French writer said, the more things change, the more they remain the same. So Castrol was such an idea which we picked up in our...
So how much of the good news is in the price for Castrol?
So the company is becoming very aggressive now. Right? They want to capture the lost market share from their competitors. Yeah. They have also hired Shah Rukh Khan as brand ambassador. You must be knowing that. And they are currently also EV ready. So they are, the EV cars are factory filled with Castrol liquids. Yeah. And the biggest adjacency, if it happens, is the data center opportunity. Correct. As of now, the revenues are zero, but their parent, British Petroleum, has spent a lot for the data center R&D. So those things can play out.
So, I just wanted to actually touch upon what you said. And that's my next question. Then how are you deciding which stocks to pick within the mid-cap and the small-cap space? Themes, I understand that you're probably going to veer away from themes. But within that entire portfolio, what is your recommendation, or how do you choose your mid-caps and small-caps? What is the time frame of investment? When do you think is a good time to pull out?
So we typically look for 16 to 20 quarters in terms of at least giving time for the management to perform. In terms of how we look at the companies, we typically look for companies which are present in product categories that are growing at 300 to 400 basis points above the nominal GDP growth of the country. So that can happen for two reasons. One, it's a cyclical reason. Sometimes it's a secular reason. Secular reason is when the consumer buying behavior for product and service change. So for example, furniture, right? So 25 years back, our grandparents actually involved a carpenter and made a very custom furniture, and work order was given, and then the products used to come after a couple of months. It used to be heavy and bulky, had a very long shelf life. That's how furniture was being bought. But now with women participation in the labor force also picking up significantly, there is paucity of time. People are very happy with people are very happy with factory-made, ready-made designs. And a lot of that furniture is made out of MDF, medium density fiber board. So if you look at the industry data, your medium density fiber board has the potential to grow above nominal GDP for a long period of time. Western economies are also pointing to that. So 80% of their furniture is made with MDF, whereas in India, 80% is still plywood. MDF is just starting to scratch the surface. So there is a long runway.
So how do you play it? MDF?
So Green Panel is the largest listed MDF manufacturer in India.
Okay.
By the end of this fiscal, they'll become the second largest in Asia.
Okay. All right. We're running a little short on time, Balaji, but I just wanted that one number. Heritage Food has run up considerably. But in comparison to its peers, how the valuation shaped up?
It's still trading at a discount to Dodla, and obviously the leader is Hudson. But they seem to be kind of increasing their value-added product mix quite significantly.
Okay. I'm just going to probe you on one more question. You mentioned you're not a big fan of themes. You don't have any PSUs in your portfolio as well. Can we tie the two together and say, are you a believer in the defense and the railway sort of themes which have been playing out?
Defense is a huge sector to kind of give a very blanket call about it. So things like MRO, maintenance, repairs, operations, these still have a lot of potential. But a lot of these defense companies, the narratives have far overtaken the numbers. So you could see some amount of time correction happening in these sectors.
Okay. All right, Balaji, appreciate you joining in and giving us your quick take. We look forward to chatting up with you in the time to come.
Pleasure. Thank you.
Well, for the time being, we'll slip into a short break. On the other side, we'll focus on JBM Auto. Remember, they won that big order just yesterday. Stay with us.
Welcome back. Well, for the markets, it's doing well in terms of the broader markets. Just want to point out that there are two stocks which stand out today from the entire pharmaceutical space, which is Orchid Pharma. That stock has given over 100% returns this year already, and it's gaining around 7% in today's trading session. And the other one is Wockhardt, which has given returns of over 140% this year. That stock is gaining around 3% in today's trading session. So both the stocks are managing to see some amount of traction on the upside. But let's talk about one particular broader market stock, which has given returns of around 30% this year. JBM Auto, which is in focus. The company's arm, JBM Electric Vehicle, has signed an agreement with Leafy Bus to supply 200 electric intercity luxury buses. The deliveries are expected to be completed within the next 24 months. To decode this, we have Nishant Arya joining in to talk about that. Nishant, hi, welcome to the show. So just give us a few details with regards to this 200 bus order that you've got for electric intercity luxury buses. When does it start? What are the margins like?
So we will be delivering these buses after 2 months. So we will start delivering them, and we will be completing this over a period of next 2 years. So definitely the margins would be more than 12% EBITDA, which we are anyways consistently looking at delivering from our electric bus business.
All right. Hi,
This
Nishant.
will be one of the largest orders as well in the country today, which have been placed for the intercity market, as the market is definitely transitioning to luxury intercity buses, where we have positioned ourselves as the industry leader, and order has fructified, and definitely we'll be looking at executing many more such orders in the coming months.
Okay. All right. Hi, Nishant. Good day. Good to see you in. So congratulations on this order. Give us a number, though. Since it's a luxury bus, how much do you get per bus? I think normally we work with around 1.5 crore, if I'm not mistaken. How does the price of this bus compare with what you normally do?
So approximately, you can say about 1.8 crores per bus.
So it's around 360 crore order. Around a 360
correct,
crore order approximately?
Correct.
Got it. All right. Earlier when you joined us, you had given us this guidance that you'll be delivering 2,500 EV buses in FY25. Was this baked in? Part of this order will get executed in that 2,500 EV buses, or is this incremental?
Yes. No, this is part of that only.
Okay. All right. Tell us about what the pipeline is looking like now, Nishant, considering that you've got this particular order. You do have a manufacturing unit in Delhi NCR. So give us a sense in terms of what's the incremental pipeline in terms of order inflows that we could expect, and what you might even be bidding for.
So currently, our order book is more than 5,000 buses. With this order, it would go to almost 5,500 buses, which is there with us. And definitely, as I shared, that this year we'd be looking at about 2,500 buses, and rest of the buses would get carried forward to the next financial year. And we will be looking at delivering all the buses in the next financial year out of the 5,500. And definitely what we are targeting to do is that not only number of buses but the value proposition substantially with such kind of luxury products we are bringing to the market.
Okay. So what is the monetization plan, say, for the EV segment? Because earlier you have mentioned that you could probably look to list the EV business. Give us a sense in terms of what the timeline would be. Is that something which is still on the cards that you are considering? Is the business big enough for you to do that?
No, we are not looking at monetizing the EV business on an immediate basis anywhere. There is no such plan. But definitely, we are always looking to see how we can enhance value for the shareholders on a constant basis, but there is no plan in the pipeline as of now.
Is there a plan to acquire SML Isuzu?
So I would not like to comment on market speculation.
But any other inorganic plans that you're looking at, or this one at all? You know, because the street believed that that was on the cards. You want to deny it?
No, so there is no inorganic plan now which is definitive in nature and where we can really take up anything as of now.
Okay.
Just a quick word before we let you go. If you could just reiterate what the growth rate is for the EV segment, how much are you generating in terms of revenue right now, and what is the growth rate, and what do you end FY25 with?
So if you see FY23, we were about 550 crores. And FY24, we were at about 1750 crores. So the growth rate was more than 3x. And this year, we are targeting about 3,000 crores from the EV business. Because the first quarter was a bit slower since elections were going on and multiple states were not looking at executing projects because of code of conduct and other things. So therefore, it was much slower than what we would have liked it to be. So therefore, this year would be about 3,000.
Got it.
So
Nishant.
Significant growth over last year. Yeah.
All right. So EV we've got. What about the hydrogen bus? There were some plans on that front?
Not that I know.
All right. No, just trying to clear the air. So it's EV itself, no hydrogen bus, right?
Right. And whatever I'm talking is all EV buses. Right.
Okay. All right. Thanks a lot, Nishant, for stopping by and filling us in with all of those details. Market seems to have liked what you said. From the time we started the interview, I think the stock has moved a little bit. Maybe an intraday chart should come up for you on the screen. I think the graph is not updated, but the ticker is telling us the picture. The stock has moved up by close to around 1% or thereabouts. Maybe, in fact, we'll fire that yet again. For the time being, though, we'll slip in a short break. On the other side, Manisha Gupta will be joining, and she'll be joined by Mr. Deepak Balani, the Director General at Indian Sugar Mills Association. Stay with us. Welcome back. Post that positive commentary coming in from JBM Auto. We have seen that the stock has spiked up in the last few minutes. So the intraday chart should come up for you on the screen. The Nifty is doing well. Yes, we're holding with good gains, but plenty of movers actually from the broader markets. Case in point being Page Industries. Just take a look at that stock go. It's spiking up as we speak. A big up move is what we're seeing out there. IRCTC as well moved into the fast mode. It seems that stock has moved up. And Vodafone Idea has come in for some mild profit taking currently at the low point of the day. But as promised, Manisha Gupta joins us and she's got a special conversation on the sector of the day, sugar. Manisha.
Oh, well, absolutely. That is buzzing and how. And we have with us Mr. Deepak Balani. He's Director General at India Sugar Mills Association, ISMA, that is. Mr. Balani, hi, thank you so much for joining us. And clearly, a couple of notifications overnight and have done wonders for the mood and euphoria in the sector right now. The first one first, and all the restrictions that were put in the month of December seem to have been done away with. How is the industry looking at that one?
Yeah, hi, Manisha. I think we got a very good news last evening, and ISMA welcomes the decision by the government to lift the restriction on ethanol production. I think it is a right step by lifting the restriction from for ethanol production from juice, B heavy and C heavy. I think this will be a significant relief for the entire industry. We have seen a one-time occurrence where the restriction was put in place last year, December. But I think this will give a lot of confidence to the industry to go as per their planning on ethanol production. I think there are three things which are coming up very clearly from this decision. I think this shows that the government is very confident about meeting the ethanol blending program of 20% by 25-26. We are hopeful that we'll be achieving 18% in 24-25 and subsequently 25-26 or 20%. I think this also shows that the government is committed towards reducing the carbon footprint and also willing to walk an extra mile to meet the net zero target by 2070. I think it will also, very importantly, this will enable the millers, the industry, for making the timely payment to the cane farmers. I think this decision is also going to benefit a lot of farmers across the country. Finally, the decision is also reaffirming smart stand and smart study, which was basically based on various yield estimation and the crop estimation, that the next year crop is going to be good and we will have sufficient stock to meet both the domestic demand and absolutely unhindered ethanol diversion. I think having said that, Nisha ji, I feel this is just the half done. As said by many people, I think this is just the work in progress. We are now expecting the correction in the ethanol price, which has actually not happened in 23-24 as well in 24-25, even after the FRP has been increased. So now we are expecting the government to take a call on revision or correction of the price of ethanol, specifically from the sugar feedstock, juice behavior. And we are hopeful
So,
that this will...
Mr. Balani, also, just coming to ethanol, and while you've said that the ethanol prices have not been hiked since 23-24, 24-25, but what about the sugar MSP? I mean, that hasn't been hiked from 2019. Are you pushing equally strongly for that?
Yeah, absolutely. As you know, we have both ISMA and the Federation, we had done a complete pan-India weighted average of the cost of production, which we have already submitted to the government at around 41 rupees 66 paisa. We basically have also worked out a formula for calculation of MSP vis-a-vis FRP. And this is as per the past practice in 18-19 and 19-20, when it was 29 and 31 rupees. As per the formula, the MSP which we have proposed is 39.14. And we are hopeful that the government will take a decision on MSP soon and will enhance the MSP to around 39 rupees.
All right. Mr. Balani, that's all about sugar and ethanol. But when it comes to grains, and as you pointed out, that the ethanol pricing needs to be changed itself from sugar. When it comes to grains, and there was a second notification that came in the evening as well. This was about Food Corporation of India e-auction, where the distilleries can also take part of now. But the pricing of that, and we've spoken to various millers since morning today, the calculation of that also is not feasible, does not work. So would you say, apart from sugar, the ethanol pricing from rice, from grains, from maize, etc., also needs to be perhaps reworked?
No, I believe we talk about mainly sugar feedstock. So my still focus will be at least to get the cane juice price of ethanol to at the level of maize to around 73 rupees, which basically that is exactly what government has done. Around 5 times the ethanol price was revised, and there's an absolutely set formula. So in that also we have also given a formula, and we are expecting the cane juice ethanol to be revised to 73, followed by B heavy to around 67, and C to 61, around 60-61. But having said that, I think the rice decision of additional permission to use FCI rice for ethanol production, I feel this will also help our sugar mills who have dual feed distilleries.
Mr. Balani, but the e-auction does take time. It's a long procedure and the calculations are not exactly profitable. So while you're pushing for all of this, are you also pushing for the rice grain ethanol?
We are still working on, we are trying to understand how the entire procurement will take place, Manisha ji. I think we will come back to you sooner once we have studied this order and also discussed with our millers.
As you mentioned, these are a couple of positives that we've seen the industry already see right now. Going forward, when you look at the September quota that has been made available for festivals, isn't so high. It's kind of neutral if you look at the number as compared to last year as well. So what is your sense of demand going forward for the festival season? And would you say that there's enough availability?
Yeah, there is enough stock. As you know, the closing stock in by end of September, we will have almost 85 to 90 lakh tons. And everyone knows that we have sufficient sugar stock in the mills. So I think there is no reason that the prices will go high. In fact, in last 15-20 days, we have seen that the demand has slightly gone down. And I think government has done a right decision and given a reasonable quota. of 23.5 lakh tons. I think this will help in stabilizing the prices. Having said that, 70% of the entire sugar is purchased by the bulk consumers, and only 30% goes to the retail consumer. So I don't think this will have any inflation effect on the retail customers as well as sugar prices are concerned.
Also, Mr. Balani, with the kind of government initiatives that we have seen come in for ethanol and the support back into this, would you say that the export demand that the industry had been making for some time can be put aside for time now?
No, I don't think so. See, as I said, we have a very high closing stock by 30th of September, and next year projection looks to be very good. And even if we take the domestic consumption of 285 to 90 lakh tons next year, and ethanol diversion of around 45 lakh ton, we will still have 20 lakh ton of sugar exports. And I think you know that the global market is slightly elevated because of some incidences in Brazil. So I think this is a very good window. This is a beautiful opportunity for the government to allow exports of around 20 lakh tons so that it could give at least some relief to the industry.
My final question is, since we are talking about 18% blending next year and 20% year after, and that would perhaps mean 9.5, 9.9 billion litres, would you say that with the kind of availability that we have, whether it comes from grains or sugar, we would be there on track?
Yeah, I think for 18% we'll require 900 crore litre, and going forward 20% will require around 1,000 crore litre. At the moment, sugar industry has a capacity of around 850 crore litre. So with 80% efficiency and some diversion to ENA, we still have the capacity of producing 550 crore litre. So I don't think that there would be any problem in meeting the 18% or 20% target. The sugar industry at least is ready to provide 55% of the ethanol for 18% or 20% blending. But I think the very important factor, one has been addressed, is the sugar diversion towards ethanol. I think what is now needed is the correction in prices.
All right, so that will really define. While the numbers seem to be working fine, the trend seems positive as well. But the ethanol pricing is one thing that the industry is sitting and watching, waiting for right now, and that would ensure that we get the desired numbers there. Mr. Balani, as always, thank you so much for joining us. With that, that's all the time that we have on the show. Business Lunch will take all the action ahead.